Get the straight talk about the good and the bad in the timesharing industry. Timesharing Today.
This is a Timesharing Today iNews special report. I'm Shep Altschuler, publisher of Timesharing Today. Jeff Weir, investigative correspondent for Timesharing Today, sent an article about an uproar caused by the Consumer Financial Protection Bureau's ruling banning mandatory arbitration clauses in contracts. Jeff joins us on this broadcast to explain the background of this ruling and why it's of interest to timeshare purchasers. Be sure to read the article that accompanies this discussion. Hi, Jeff. Thanks for joining us.
Shep, I'm glad to be here. Happy to help.
Give us a little background on the CFPB, its genesis, and why it's so controversial.
I'd be happy to do it. The Consumer Financial Protection Bureau was created 6 years ago in the aftermath of the mortgage crisis, and it was created to provide an independent agency that could regulate banks and other financial entities that offered credit or loans to consumers. And it was created during the Obama years in the aftermath of the big mortgage crisis, and as a result, the agency hit the ground running with a mandate to clean up bad lending practices in all kinds of industries. And it has had an amazing track record in only 5 years of announcing crackdowns on major companies for lending abuses affecting millions of consumers across the country. The single biggest was their fining Wells Fargo Bank $100 million for creating thousands of phony customer accounts that enabled Wells Fargo employees to boost their bonuses. In the aftermath of that fine by the CFPB, many Wells Fargo employees were let go, including the CEO, because it was a major embarrassment for one of the biggest banks in the country. And that one case, even though it was surrounded by many others, put the CFPB not only on the map as a force, but also as an entity to be feared and distrusted by major business groups that have lending practices, credit card companies, typical small regional banks, and big companies that even like cell phone companies where they offer credit, and even timeshare companies that offer consumers instant credit card approval at fairly high interest rates to pay their down payments on their timeshare purchases.
Now let's take a look at the article that you sent. Let's spend a few minutes on that because evidently there's been a major uproar over this ruling by the CFPB dealing with mandatory arbitration clauses in financial contracts. So talk about the article and why this is so relevant to timeshare consumers.
I'd be happy to. The CFPB for a couple of years has been looking at timeshare companies for both their sales practices and their lending practices. And they were looking at it because in many cases you could argue that timeshare companies over time have become banks, where they help give you credit cards and they also give you mortgages to finance your timeshare purchase. So as a result of that emerging practice in the timeshare industry, the CFPB started looking at Westgate resorts a couple of years ago. They launched a formal investigation. Westgate fought it. There was the equivalent of a regulatory court battle over that. Westgate lost. The investigation continued, and then early this year, around March, the CFPB effectively dropped the investigation of Westgate because after looking at its records for a good 16 months, they did not find anything actionable. So that was good for Westgate, and the timeshare industry as a whole breathed a sigh of relief because there had been a fair amount of paranoia within developer companies that the CFPB might target the timeshare industry and go after numerous companies. Anyway, that did not happen. However, recently the CFPB announced a new ruling that bans mandatory arbitration in consumer contracts that have the net impact of banning or blocking class action lawsuits. And the CFPB basically came out in a speech and a press release announcing that consumers should not be denied their day in court. Mandatory arbitration clauses can deny rank-and-file consumers the opportunity to seek, legal redress for perceived wrongs. And in the aftermath of the announcement of this ban on mandatory arbitration clauses, Republicans in the Congress and business groups that are leading lobbying entities for U.S. companies launched a campaign immediately, a very public one, denouncing the new rule from the CFPB. They called for the ouster of the CFPB's director. They have sought some regulatory relief by agencies to just overturn the rule, and they have pledged to pass legislation that would effectively defang the CFPB, limit its powers, limit its jurisdiction, and even limit its budget. Behind the scenes, the business communities on one end of the spectrum are trying to find a way to get rid of this mandatory arbitration ban, and at the same time, Democratic groups that helped create the CFPB in the first place are resisting all efforts to rein in its independence. So that's like a whole drama that's happening in Congress that most people are not hearing about because the whole concept of mandatory arbitration sounds very arcane. But here's how it applies to timeshares. Every single timeshare contract I am aware of has a mandatory arbitration clause buried in the paperwork that says if there is a dispute between a buyer and the developer, the dispute will have to be submitted to an arbitrator who will hear the relevant facts and then rule up or down, yes or no, on the case, and that will end the dispute one way or another. Lawyers who defend class action litigation as a legitimate thing for American consumers have long fought these mandatory arbitration clauses because they look at them as a ban on lawsuits. And there's even a federal case pending in Nevada right now where an elderly couple is suing a major developer, and the thrust of the case hinges on whether the case can be certified as a class action or whether the mandatory arbitration clause in that contract prohibits a class action case from being pursued. So the mandatory arbitration clauses used by timeshare companies have been a staple for years. If this new rule from the CFPB stands, all future contracts will have to be written so that if there is an arbitration clause in the contract, it will not preclude an owner's right to go to court if they are dissatisfied with the arbitrator's ruling. The thing I want to mention, and this is something that most timeshare owners will readily understand, these mandatory arbitration clauses in timeshare contracts are the kinds of things no one thinks about until they have a problem. And then they find out it exists, and then they find out that it has the equivalent impact of limiting what a consumer can do if they're really angered by what they thought happened. And so even though those contracts were signed by the consumers, I would guarantee you that 99 out of 100 timeshare purchasers knew nothing about that aspect of the contract when they signed it. So to discover belatedly that you were prohibited from going to court because of a mandatory arbitration clause probably rubs some owners the wrong way because they probably never knew about it.
Thanks, Jeff, for providing insights about the CFPB and its ruling.
You are welcome, and I just hope your readers don't have to become lawyers to figure this stuff out.
This concludes this Timesharing Today iNews special report. Be sure to read the accompanying article and send your comments to staff@tstoday.com.